I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob, and happy Easter.
Jim, always good to be with you.
Tesla is now on paper worth more than General Motors. It passed Ford a couple of weeks ago. Many people don't understand why it might have such a high evaluation, but perhaps it's because it doesn't owe any pension obligations yet, or may never.
Yeah, and it doesn't have Detroit-type unions, which we really did severely set back the American automobile industry. You go back to the 50s when virtually the big three had a monopoly, and the management, which, you know, you went from ownership, like Ford, to then hired management who didn't really own the stock, so it was different. And so anyways, they couldn't face the threat of a shutdown of the assembly line. So they then would negotiate with the unions to get a higher wage rate, but they could see too much of that is going to hit earnings right away. So then a lot of it was given away on the never down the road, unrealizable pensions, certain days off, spa days, it was unbelievable. And I had an acquaintance a few years ago who was an automobile engineer and had a consulting business to the big ones and their assembly lines. And he said the union people know that this is impossible, but they just can't cooperate. So then you had relatively tame unions in other states where then a new production was set up. And then if you want one explanation for the destruction of a whole city is Detroit and unions. And what it is that an ambitious union leader in a contest against somebody else heading for the union leadership has to promise more. And then he's got to grind it out of the management. And then, as I said, management would surrender a whole lot of stuff on the never. So anyways, then what essentially became is that General Motors, as an example, was not allowed to make money in Michigan. Well, this is all going to change. Property values are depressed in Michigan with the Trump reformation. There'll be less regulation and lower taxation rates, which will make them quite competitive. There may be something to make unions in that state less bloody-minded. So, and then here you've got then Tesla with a new, a few years ago, faddish automotive product, the electric car, which really does nothing to reduce pollution. It just moves it somewhere else. It doesn't happen where the car is. And gullible governments. I don't know. I saw a number a couple of years ago, $4.5 billion loans, and then they say, "Oh, we got to make lithium batteries." So you're making a huge taxpayer-funded production facility in Arizona, I think it is, So then, early in the week, retired automobile guy, I think from General Motors, just reamed out Tesla something awful and saying, you know, you can't build a company by selling a car for less than what it costs you to make it. And you can't. And you look at, sure, there's a novelty there with electric cars, but even their $100,000 car, they can't make money on. And so they're trying to come out with something like a $30,000 car, which they can't make money on, even worse. So somewhere the market forces have come into play on this, and again, through gullible governments, the taxpayers had involuntarily a huge amount of money committed to a financial adventure. And we got, you know, how many of them have there been? There was De Laurent and Nova Scotia or something like that, that automobile guy, and he was going to produce the supercar and whatnot that. And then there was one before that, but I can't even remember the name of it. So it's a very dangerous thing when you get financial adventures get through to governments for subsidies where individuals, taxpayers, shouldn't even invest money in those things, but a bunch of crazy politicians are doing it on their behalf. So I think this would be a culminating event of this kind of craziness. So what you want to do is stand back and think, now, just how far would the electric car be without the subsidy? And then market forces, rational market forces would be making the decisions. And you have things like, again, the liberal left celebrate electric cars as being non-pollutant. But you consider how much lithium is mined, refined, and whatnot, metals, all that sort of stuff, in order to make those batteries. All it is rearranging things a little in order to ease liberal guilt. And if we go into an economic contraction and a credit contraction, it'll sort this thing out quite readily. You'd have to watch the chart on it. And Tesla, we looked at it a couple of weeks ago, and it had become really quite overbought, so it's eligible for a correction. That's just on the stock. And what happens if economic reality comes in?
And then you have all these people, too, who have reserved their Tesla 3, which is supposed to sell for $35,000 US. Will there be a markup to take into account the Canadian dollar is 25% less than the US dollar?
Oh, yeah, you got that too, U.S. dollars to Canadian. But then when it's time to change the battery, you've got something like a $7,000 bill on that one. So it's one of these things is, now I can save myself, we can save society $100,000 by putting in this new system that costs $2 billion. And this is what happens when you end up with fiat decisions made by political people with no regard for engineering costs or economic costs. It just goes absolutely crazy. You've got the same thing with energy, electrical energy, with wind turbines and solar cells. Now, it's a given that those do not work 24 hours a day. And it is also a long time given engineering-wise is that the most efficient and the cheapest electricity is based upon a plant that works flat out for 24 hours a day. And then the next stage on that is whether you fire it with coal, nuclear, or natural gas. And then, then you're right out. So the economies of scale are there. Now, England, to its regret, went absolutely bonkers on the green stuff and would ambitiously build a whole lot of solar cells and wind things, and then discovered that, hey, the sun doesn't shine at nighttime and the wind doesn't blow all the time. So what does that force? They had to build the equivalent size plant of, let's say, natural gas-fired electrical generation. So they're paying twice for one amount of electricity. But they're not running the natural gas-fired plants flat out where you get economy of scale. No, they're on a standby basis. So even that side is double crazy. And so it's mad. And then, of course, in North America, there are two jurisdictions that are absolutely crazy. One is Ontario, and the other is California with on electrical power. And it's into the same thing. You have people who know nothing about engineering or costs or efficiencies on a political mission based upon their superstition about CO2 causing warming or change or whatever it is, the issue of the day. And with incredible political force are messing up the economy and laying a whole bunch of debt for stupid decisions on a generation yet to come that has no vote in the thing. So, but, such political excesses have happened in the past. Our theme is that the last experiment in authoritarian government ran through the 1500s and corrupted everything in sight, and individual public began to figure out that, hey, this is not working, and moved to examine every institution if it was useful or not, or too much authoritarian. And it was called I've called it the Great Reformation. Really began to get underway in the early 1600s, and England's the best place to follow it, where finally in 1688 they had the Glorious Revolution, where the last absolutist king was deposed. You made a big step to really a parliamentarian government, where people took control, to control their own affairs. Well, it's been similar. A huge experiment in authoritarian government all around the world. Every country experimented it in its own way, and it's been going on since around 1900. It at various times became really nasty, as practiced in Eastern Europe with communist governments. And but the latest fascination, of course, is with the previous administration in the United States under Obama. That was the most anti-business and most authoritarian attempt at government in U.S. history, and it has had a lot of emotional followers. But what it did is it got so much that it set up a popular uprising, and similar to the one in the late 80s in Eastern Europe that took on an extremely authoritarian government. And with the fall of the Berlin Wall, which was symbolic, took on and bypassed communism. But under Obama, you effectively the government was attempting to build the regulatory equivalent of the Berlin Wall. And then you had finally people looked at it and said, this is ridiculous, and a popular uprising which chose Trump as a leader. let's say a popular uprising now has an executive, and it is highly offensive to the establishment, which has had its own way for so long. So the politics are pretty exciting, but the thing is to get back to Tesla and the artifice of that one, and so that's the consumption of electricity, which is determined by government, not by market forces. Then the generation of electricity determined by government, not by market forces. And it's become highly impractical and quite likely to fail. So one of the things that's been essential to the whole expansion of government has been perpetual financial bubbles, of which it benefits financially. When you got a boom going, there's all kinds of taxation that can be extracted out of the system. So anyways, you've had the biggest bond bubble in history, and on the long Treasury side, it blew out in July, which we took as ending action, and figuring that the action in corporate bonds would continue, and more recently, using junk or high yield, it became exceptionally overbought. And so the great big financial bubble in bonds has reached excesses from which it can be a contraction can follow, and a contraction would be very painful. But the key thing is that it would begin to deny funding to authoritarian governments. And this would be, a contraction is going to be painful to everybody, but it would certainly assist people in criticizing the government's excesses, of which Tesla, electric cars, and the generation of electricity have been so politicized. So, Jim, we're living in fascinating times, exciting times, and I'm very pleased to be vertical and to be able to watch it as this evolves. And so what we want to look for here now is that the stock market speculation has become excessive. That's whether you use indicators based upon momentum or sentiment, bullish opinions are really to the moon.
And Bob, we should talk about that when we come back after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're speaking with Bob Hoye. So, Bob, the equity markets, you feel, are in for a major correction?
Yeah, that would be, as usual, tied to changes in the credit market. So we're getting a bit of a change there. Spreads are no longer narrowing, but they really haven't reversed yet. And typically there's a seasonal for credit spreads where it can be positive into May, and that's not so far away now. And then you've got credit, the yield curve, which is the difference between short rates and long rates, and it's poised for a change. So, first of all, the change in the credit markets, as in May and June of 2007, and then you'd get eventually the change in the stock market. And then the other one you've got in here is that industrial commodities, base metals, and crude oil were likely to rally into March. They weren't too exciting in March, but they've had the target for crude oil of 53. The other day it got into the early 53s. So that one's obtained. A rally in base metals. We had another leg up, and that's been obtained. So much of what we're looking for in the first part of this year has been obtained. The stock rally, the rally in low-grade junk bonds, and the move in industrial commodities. And again, to emphasize that the action in stocks and junk bonds has been exceptional and measures a lot of speculation in there. So we just wait for this seasonal to work its way out and for the highly active sectors to take a rest.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, the price of gold hit a 5-month high after Donald Trump was talking down the U.S. dollar. Will his talk have any long-term impact on gold?
I don't think so. I think he'd be best advised to not comment on specific things such as the dollar and stuff like that. Depreciating one's currency is a horrible cheat. It shows an incredible lack of economic knowledge and integrity. And also at our work, the latest correction in the U.S. dollar index, that's the DX, is in a bottoming pattern, and with a little more work, and also it interacts with the 20-week exponential moving average. So it's building a bottom similar to what it did in 2014 when it had a terrific rally. Now, a whole lot of gold bugs and whatnot think that what the Fed does is evil. And I agree, but their sense of evil is that they will always be able to depreciate the U.S. dollar at will, and there are times when this doesn't work. And in a contraction, it definitely doesn't work, because during a financial mania, most of the debt is underwritten in the world's financial capital, which is New York City. And with that debt, most of it is obligated to be repaid in U.S. dollars into New York City. That's both on interest payments and ultimately redemptions. So in effect, if you're out there, and I saw the other day that the little island country of Papua New Guinea, which is considering floating a debt. It shows that the demand for high-yield stuff is absolutely insane, because I think only about 30 years ago the locals were still into headhunting there. So it's a very primitive country. But it shows that the debt buyers who are reaching for interest rates, are absolutely mad. Now, whether it goes through, who knows? But it shows the recklessness in the bond markets out there. So if the bond market fails, which is likely, then it becomes of interest, of major concern. But let's go back to, the 1870s when Bolivia was an emerging country and they produced a lot of tin. So then they had to sell tin, an industrial commodity, in order to get their hands then on sterling, which was the senior currency, to service debt into London, which was the world's financial capital. And so in order to do that, they had to sell something to get senior currency units. So here we're going to go through the same thing. So in effect, in a financial bubble, the debt that is contracted in the senior currency and payable into New York is a huge short position of U.S. dollars. Now, I've been telling this story for decades, and somehow the gold bugs just don't get it. So anyways, the condition in previous post-bubble contractions has been that the senior currency becomes chronically firm against most other currencies and most commodities for most of the time. And let's look at the top of the bubble was 2007, and the dollar index was 72, I think, well, close to 72, and now it's at 100. And you've had, plenty of reasons why the U.S. dollar should go down. Completely reckless central bank. But what's offsetting recklessness is that the velocity of money, the turnover of money, has been reducing, and so the central bankers don't have the bang on inflation that they used to have. And you have, since 2007, a firming U.S. dollar. Sure, there's been some more swings there, but it confirms our view that one of the features of a post-bubble contraction is a firm senior currency. So the next, we got to watch the chart here, Jim, and let it build its base with the 20-week exponential moving average, and watch for the breakout. And it will be very exciting, I tell you, the next rally up. And it doesn't matter what Donald Trump says about what the dollar should be. He's just parroting some central banker or economist who are intellectually vacant and thinking that economic benefits can be obtained through depreciating currency. It's absolute madness.
Well, what about the Bank of Canada governor, Mr. Polos, who does nothing but continually badmouth the Canadian economy? He's supposed to be the spokesman for Canada, isn't he?
Oh, I guess so, but he's in a tough place. There shouldn't be a Bank of Canada. We're sitting here with 4,000 miles of border with the biggest economy in the world, and somehow the guys in Ottawa have this dream idea that there is a separate, a national economy in Canada that is separate from that of the U.S. There's no such thing. And there's not even a national economy in Canada, because there's a world of difference between the economy of Ontario, which used to be industrialized, and the resource economies of the western provinces. So even the idea of having a monetary policy for Canada itself is silly. And then to think that there is a separate national economy, separate from that of the U.S., is also silly. So what Canada should have is a marketing board. Set the Canadian currency at par with that of the U.S., get rid of the Bank of Canada, have a currency board to keep it at par. Hey, real easy. And of course you know that whatever stimulus is going to be tried will be done by the Americans, and the Canadians don't have to suffer from at least a domestic currency depreciation. So, but hey, this is dream world stuff. But you never know with the next contraction when it comes in. The public in Canada could start a popular uprising to take control of the politics in Canada, similar to the popular uprising in the United States. So there could be, on the political side, brighter days ahead.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and you have a good long weekend now.
I'll do my very best. My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward questions for the show or for Bob to info@HowStreet.com. I'm Jim Goddard. Happy Easter.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of Howe Street Media Incorporated.